Electric cars are everywhere now, running on electricity instead of gasoline. Their most important part? The battery, a complex device made of many cells. The cathode's material decides how much energy the battery stores and how far the car can go. Better, cheaper batteries could make EVs accessible to more people. That's where companies like L&F come in, helping power the future of transportation. When it comes to electric cars, Tesla is the name everyone knows. Led by Elon Musk, Tesla's sleek designs and long-range batteries have set the standard. But behind the scenes, companies like L&F play a crucial role. L&F, based in South Korea, specializes in high-nickel cathodes, key for powerful long-range batteries. High-nickel cathodes let batteries store more energy, which is exactly what Tesla wants for its top-performing cars. Think of Tesla as the visionary architect, and L&F as the master craftsman supplying a vital building block. Tesla's success depends on a global network of suppliers, and for batteries, the quality of materials is everything. The partnership between Tesla and L&F was a big deal in the industry. It showed how car makers and suppliers must work together to push technology forward. No company can do it all alone, especially in the fast-moving world of electric vehicles. The Tesla L&F deal promised to bring cutting-edge battery tech to millions of cars. It was a partnership built on innovation, expertise, and the drive to make EVs better and more affordable. But as we'll see, even the best-laid plans can face unexpected challenges. In early 2023, Tesla and L&F announced a massive $2.9 billion deal. L&F would supply Tesla with high-nickel cathode material for 2 years, fueling Tesla's next-generation batteries. This wasn't just a parts order. It was a strategic partnership signaling Tesla's commitment to advanced battery tech. The deal was tied to Tesla's new 4680 battery cell, which promised to revolutionize electric vehicles. High-nickel cathodes from L&F were seen as the perfect match for these powerful new cells. The industry watched closely, seeing this as a sign that Tesla's ambitious battery plans were real and imminent. For L&F, it was a breakthrough, validation from the world's top EV maker, and a huge business opportunity. For Tesla, it meant securing critical materials for its next leap in technology. The plan: L&F produces the cathode material in Korea, ships it to Tesla's U.S. factories, and millions of new batteries power the next wave of Teslas. The $2.9 billion figure represented a huge volume of material and a huge bet on the future. This deal was set to drive the electric vehicle revolution forward. But as with any big promise, reality would soon test these ambitions. The stage was set for a dramatic turn. The L&F deal was part of a bigger story that began at Tesla's 2020 Battery Day. Elon Musk unveiled the 4680 battery cell, promising 54% more range, 56% lower costs, and a new way of making batteries. The boldest promise? A $25,000 Tesla, affordable, long-range, and fully self-driving. The 4680 battery was the key to this future, unlocking cheaper, better cars for everyone. Musk also teased a Model S Plaid with over 520 miles of range, aiming to end range anxiety for good. Investors and customers were electrified by the vision, and Tesla's stock soared. The industry braced for another leap ahead by Tesla. The 4680 battery became a symbol of the next era in electric vehicles. Securing materials like L&F's cathodes was critical to making this vision real. The world waited to see if Tesla could deliver on its promises. Hype and hope were sky high, but turning vision into reality would prove far more difficult than anyone expected. The pressure was on. By the end of 2025, the Tesla L&F deal had all but vanished. L&F announced the $2.9 billion contract was slashed to just $7,386, a stunning collapse. What happened? First, the electric car market slowed dramatically. Higher interest rates, a shaky economy, and the end of U.S. EV subsidies made buyers hesitate. Fewer cars sold meant less demand for batteries and for L&F's cathode material. Second, Tesla struggled to mass-produce the 4680 battery. A new manufacturing process, the dry electrode method, proved much harder to scale than expected. Production delays meant Tesla simply didn't need the huge supply of cathodes it had ordered. The dream of millions of new batteries was put on hold. The combination of weak demand and technical hurdles created a perfect storm. The foundation of the big deal crumbled, leading to its near-total cancellation. It was a wake-up call for the entire industry. Even the biggest, boldest plans can unravel fast. The electric car revolution hit a major speed bump, and the fallout was just beginning. As Tesla struggled with the 4680 battery, it shifted strategy. To cut costs, Tesla began using lithium iron phosphate (LFP) batteries in its most popular models. LFP batteries are cheaper and durable, though they offer less range than high-nickel versions. Tesla sourced these from Chinese giant CATL, reducing its need for LNF's high-nickel cathodes. Now, only a few high-performance models needed the expensive material. Meanwhile, the only vehicle using the 4680 cell, the Cybertruck, wasn't selling well. Despite a factory built for 250,000 trucks a year, sales were just 25,000. The Cybertruck's high price and radical design limited its appeal. Tesla even discontinued the cheapest version due to low demand. With poor Cybertruck sales and a shift to LFP batteries, Tesla's need for LNF's material evaporated. The grand plan shrank to a niche product with little demand. The massive supply deal was no longer needed. Tesla's battery strategy had changed, leaving suppliers scrambling. Tesla's troubles were part of a wider industry storm. The EV market slowdown hit all car makers, forcing them to rethink big investments. Ford wrote down $19.5 billion in EV losses and canceled new models. Battery suppliers like SK On and LG Energy Solution saw major deals collapse. Factories built for a boom now sat underused as automakers slashed orders. Billions invested in anticipation of non-stop growth suddenly looked risky. The end of U.S. subsidies made things even tougher. The market sent a clear message: demand wasn't as strong as predicted. Companies across the supply chain faced painful corrections. The Tesla LNF deal's collapse was just one dramatic example. The road to an all-electric future was proving far bumpier than expected. The industry had to adapt, fast. The era of easy EV growth was over. The collapse of the LNF deal raises big questions for the future. Tesla's 4680 battery program is uncertain. 5 years after its debut, it hasn't delivered on its promises. Competitors like BMW and Rivian are catching up with similar battery tech. Tesla's next big project, the Cybercab robotaxi, now faces an unclear path. For LNF and other suppliers, the lesson is clear. Don't rely on one customer or one technology. Diversification and flexibility are now essential for survival. The supply chain must adapt to shifting strategies and unpredictable demand. The industry is moving from hype to hard reality. Technology, manufacturing, and consumer needs must align. Cost-effective solutions like LFP batteries are gaining ground. The EV transition will be slower and more gradual than once predicted. Carmakers will focus on practical, affordable EVs for real customers. Tesla must either deliver on its battery promises or pivot to stay ahead. The next few years will decide who leads the automotive world's next chapter. Let's sum up this story in 4 quick parts. First, Tesla promised a revolutionary 4680 battery to make EVs cheaper and better. Second, it struck a $2.9 billion deal with LNF for key battery materials. Third, the plan unraveled. EV demand slowed, 4680 production stalled, and the Cybertruck flopped. Tesla shifted to cheaper LFP batteries, and other automakers cut back their EV plans. Finally, the huge deal was slashed to almost nothing. Tesla's big battery dream hit a wall, and LNF was left searching for new customers. The whole industry learned that the road to affordable mass-market EVs is tougher than expected. The focus now is on making electric cars practical and affordable for everyone. Some futuristic dreams are on hold, but the EV journey continues. The next chapter will be about adapting, innovating, and meeting real-world needs. The electric car revolution isn't over. It's just entering a new, more challenging phase, and the world will be watching to see who comes out on top.